Well, I work for two organisations, the Church of England Commissioners and the Church of England Pensions Board. And between them they have about £11 billion, and that pays for a variety of the church's activities, because we have clergy, we provide pensions to the clergy, so obviously we need to ensure that there's funds to support them when they retire. And equally we have a historic endowment that pays very much for the works of the church. It contributes about 15% of the sort of core running costs, the costs and running costs of cathedrals, and the stipends of bishops and archbishops, and equally the missional work of the church as well at a sort of national level. And there's also a historic element of pensions with that too. So there's a need there to ensure that we have funds to support the church's activities. And so we operate these funds very much in line with other pension funds and international endowments, really sort of trying to ensure that there's a good return to support the work of the church. But for us, it's particularly important. We are the Church of England. There's an expectation that the way that we generate our return is done in accordance with the teachings of the church, and so we invest a lot of our time and energies in trying to convert theology and thinking of the Bible into practical application at the investment side, which is quite a challenging task, given that there isn't necessarily a section on the stock exchange in the Bible, but there's plenty of references, so to money, to different products and different ways and principles, which are then assimilated into a process of trying to understand how we can apply that to the way that we invest. There has been a gap. I think that gap is shrinking, but I also think we've got to be very clear about what kind of data and information do we need. So we speak as asset owners. We're top of the sort of investment chain along with other asset owners. We have a clear need to understand the risk that we have within our portfolio. What are the companies we're holding that are not going to manage the transition to a low carbon economy? So we want to be able to look at companies against the benchmarks of the global transition, and for us that's absolutely critical. And particularly on those sort of high impact sectors, those energy intensive sectors, those fossil fuel sectors, we want to know, what does this company look like against 2 degree benchmark? What does this company look like against the commitments governments have made? Because at the moment they don't align with 2 degrees, but they are seeing a shrinkage in certain direction towards 2 degrees. So we need to understand that. Now, information sources, my sense of it is that the gap is starting to decrease. We've invested very much in trying to fill some of that information gap through the Transition Pathway Initiative, where we've wanted to be able to assess companies looking against the benchmarks of 2 degrees and the commitments of Paris. And that for us is the key tool that we'll be using in terms of understanding the risk we have in our portfolio. It's the tool that we'll be using to guide the way that we vote. It's also the tool that we'll be using to hold our managers to account and to engage with companies. So multiple applications. Our sense is that for us will be the most effective way of being able to fulfill that information gap. There are other sources we'll use, but that for us will be the primary one. My main job is to engage with companies and to engage against the policies of the Church of England on climate change, which is that we should play, as an asset owner, a very active role in supporting the transition. To do that collaboratively as possible, and so part of my motivation was to be able to really understand the transition companies need to make. I know that there's going to be oil, gas and coal companies in the future, but I also know that there's going to be considerably fewer of them, and I want to know which company is going to transition, which are the ones we need to focus on in terms of actually enabling that transition, and which ones, quite frankly, are going to be the outliers. So TPI for me is a tool that enables me to focus my engagement. It also gives us a way of being able to very transparently rank and assess companies on 2 metrics. One is against the benchmarks of 2 degrees. The other is against the capacities they have at a management level. Are they dealing with this at the board? Is this integrated into the way they pay their executives? Do they have clear, disclosed scope 1, 2, 3 emissions targets, etc.? So TPI gives that to me, and it's something that we're now sort of seeing a growing level of support from asset owners, fund managers for. We've got over £5 trillion of assets now lined up behind looking at this risk through TPI, and it's available on the London School of Economics website as something that any asset owner can use.